June 15th, KOSPI closing. And what a massive day it has been. The monumental US-Iran peace agreement was officially finalized today after exactly 106 days of intense geopolitical conflict, and it completely catalyzed a widespread surge across our domestic market. For the past 3.5 months, global supply chains and equity markets have literally been choking under the heavy, suffocating weight of uncertainty. But today, we're seeing major upward momentum across the board. That systemic risk-off sentiment that was heavily depressing institutional and foreign participation has been completely neutralized by this historic resolution. It's fundamentally altering the trading landscape we've been navigating all quarter. Now, there is a really stark contrast in how our two major indices reacted to this macro shift. The KOSPI just experienced an explosive breakout. It soared by 5.20%, adding a massive 422.36 points to confidently reclaim that 8,500 milestone, closing right at 8,545.98. On the flip side, though, the KOSDAQ saw much more modest gains, closing at 1,034.03, up just 0.48%. So why the muted performance on the KOSDAQ? Well, it was factually driven by a structural market phenomenon known as capital crowding. Basically, institutional and foreign liquidity funneled heavily and urgently right into the large-cap tech stocks on the main board. Since daily capital flows are finite, this aggressive rotation into the KOSPI left the small and mid-cap growth constituents on the KOSDAQ largely sidelined during today's broader rally. It created a very distinct divergence. The sheer velocity of today's KOSPI rally is captured perfectly by the number 26. A 5.07% jump in KOSPI 200 futures actually triggered the 26th buy sidecar of the entire year. For context here, a buy sidecar acts as an automatic market circuit breaker. It means programmed trading for buy orders was completely halted for exactly 5 minutes before matching could resume. This allows the whole market to properly digest the sudden influx of volume. It's a rare and entirely factual indicator of just how aggressive the institutional and foreign rush was the exact moment that peace treaty was fully priced into the derivatives market. Before we break down the specific investor flows and sector rotations that you, as retail investors, really need to be aware of, I have a quick question. Are you getting value from this daily data? If this factual breakdown helps you successfully navigate these complex market dynamics, please take a second for 구독과 좋아요. Your support is exactly what keeps these daily, objective summaries coming directly to your feed. Okay, looking at how this builds into actual trading flows, there is a really clear divide in exactly who was buying and who was selling today. On the KOSPI, foreign investors were absolutely the dominant force. They logged 982.4 billion won in net purchases, while both institutional and retail investors took the position of net sellers to lock in profits. However, over on the KOSDAQ, the dynamic completely flips. Foreign investors were net sellers there, while institutional investors added 215.1 billion won, and retail investors executed a massive 863.9 billion won in net purchases. This data just perfectly illustrates the divergent strategies deployed across the two major exchanges following the peace announcement. The crucial takeaway regarding the KOSPI is this major structural pivot. Foreign investors have officially snapped a punishing 24-day selling streak. Over the last month, steady foreign capital flight has been the primary headwind, really depressing the main board. But by returning to the buy side for 2 consecutive days with that massive 982.4 billion won net purchase, they provided the exact influx of fresh liquidity needed to drive the KOSPI right past the 8,500 mark. This aggressive reversal in foreign positioning was absolutely the catalyst for today's strong index performance. Meanwhile, over on the KOSDAQ floor, retail investors really took the wheel. You guys defended the index by executing a massive 863.9 billion won net purchase. Accompanied by some steady institutional accumulation, this strong retail support kept the KOSDAQ's 1,030 level totally intact. It successfully buffered the heavy capital drain going toward the KOSPI's mega-cap semiconductors. It directly demonstrates how retail capital effectively acted as the floor for the KOSDAQ today, preventing a structural decline despite the overwhelming gravitational pull of the main board. So where was the momentum today? Sector momentum was heavily driven by post-war recovery and reconstruction prospects, weaving together 3 major industrial pillars. First up, semiconductors showed major strength based on expectations of a post-war AI demand recovery, especially as supply chain anxieties and energy costs stabilized. Simultaneously, the automotive sector rallied hard on the prospect of large-scale vehicle deployments for Middle East reconstruction and the anticipated expansion of commercial exports. And rounding out this industrial surge, shipbuilding saw a massive jump, driven by spiking global new ship orders alongside major domestic defense contracts. Each of these sectors directly benefited from the stabilization of the global geopolitical landscape. Let's look at the exact closing numbers in Korean won for these market heavyweights.
Samsung Electronics closed at 337,000 won, up 4.50%. SK Hynix really led the chip charge, surging 6.42% to close at 2,288,000 won. Hyundai Motor logged the highest return among the top 5 market cap heavyweights, jumping 6.59% to 647,000 won. In capturing this entire tech wave, the Hanaro Semiconductor Core Process Leaders ETF recorded a stellar weekly return of positive 23.36%. These figures represent significant nominal gains in Korean won, reflecting the really aggressive capital inflows straight into domestic megacaps.
Drilling down a bit into that shipbuilding surge we mentioned, Hanwha Ocean was officially selected by the Defense Acquisition Program Administration as the primary contractor for the 7 trillion won Korea Next Generation Destroyer, or KDDX project. This is a massive milestone that secures years of manufacturing pipeline and provides exceptional long-term revenue visibility. Combined with objective global shipping data showing new orders crossing the 1,000 vessel mark, these two concrete data points entirely drove today's sector-wide supercycle expectations. It's a textbook example of how domestic defense contracts and global macroeconomic data are aligning to heavily boost the heavy industry sector. Checking in on the currency market, the USD to KRW exchange rate has stabilized at 1,507.90. This is a significant cooling off from its previous peak of 1,561. The finalized peace news and cooling energy costs are actively buffering greenback's strength right now. Factually, this stabilization is an absolutely critical data point for retail investors to monitor. Why? Because a cooling exchange rate reduces domestic energy overheads and eases inflationary pressure on domestic manufacturing, but most importantly, it directly lowers the cost of imported raw materials, which is vital for maintaining the profit margins of our export-driven megacaps. Now, zooming out, 3 major global macro impacts are directly dictating these local flows today. First, WTI crude has plunged to its lowest level since April. This is a direct and immediate result of the reopening of the Strait of Hormuz and the complete removal of that supply block risk premium. Second, Elon Musk's SpaceX officially completed its highly anticipated 100 trillion won IPO on the NASDAQ. And third, the Bank of Korea reported a massive $26.2 billion foreign capital net outflow for the month of May. That was an exit overwhelmingly driven by equity liquidation right up until today's peace pivot. Together, these external variables created the exact environment that catalyzed today's explosive trading action. Focusing specifically on that SpaceX IPO for a second, it does present a factual systemic risk to local markets. The completion of a blockbuster 100 trillion won listing on the NASDAQ naturally draws immense global capital focus. Mechanically, this has the potential to drain liquidity right out of local emerging market listings, creating a structural dynamic of post-listing capital flight. When a mega IPO absorbs that much global capital, foreign institutions often liquidate emerging market assets just to fund their participation. It's a vital data point that retail investors should monitor objectively going forward, simply because it directly impacts the available liquidity pool for domestic equities. As we've seen today, global geopolitics, from historic peace treaties in the Middle East to massive mega IPOs in the US, directly and immediately dictate our local market flows. Moving forward, the objective data point to monitor is liquidity. Will this new foreign influx sustain its momentum, or is it strictly a temporary post-war relief rally? That's the exact data we'll be watching next to provide you with the facts. 시청해주셔서 감사합니다.